All right, guys, Sam back with you here on October 16th, Tuesday, early afternoon. And next up, right, of course, Tuesdays, we look at traditional assets, and I have members interested in a look at eBay. So I thought this was a good opportunity to just kind of go over a couple of things here. And we haven't done as many equities as probably as we should here, but they don't trade any differently, right? So as I will tell you, this methodology, you can apply it to any asset class, any time frame. It doesn't matter. So I like to use these opportunities just to demonstrate that, prove the case. So now this is a 3-day chart, right? So every bar is 3 days, right? 3-day chart. So long time frame. So we're going all the way back to the 2009 low. Right, and we can see we've got a completed 5-wave structure here. Now, we're going to get into this on the heart right edge, but just before we do that, let me just show you this. Right? It's just, again, it doesn't matter. I'm telling you guys, the asset, it doesn't matter. Okay, so let's look here. We're here. This is the what is that? The 2005 high. And you're like, oh, come on, man. This not on a 3-day chart. Nobody's trading that. Why would it? Right? It doesn't matter, guys. It's the same thing every time, right? So swing high to swing low, right? Do you have to wonder, or do we wonder what happened here? Well, no, here. So first we get the 50. It doesn't have enough legs to get down. We go back up, test the golden zone. Remember, they start selling here. They defend all the way to the 65, right? So from that zone, it's damn near to the tick. All right, so there we got one. You're like, okay, all right, so it worked once. All right, that's fine. All right, well, let's go to the next one. What do we got here? So swing high, swing low. All right, so there's the 50, there's the target. So back to, that's a huge move. That's from 17 to $6, right? There's their target. Right? And there's another one in here as well. So note here from this first, in case you missed the first one. All right, then we've got, here's the 50, so you got a chance to add if you weren't in the first one. All right, well, we see here's first target. You get 2 and 3, you get all the way to third target there. All right, so again, these are 3-day charts, big swings, right? So paid, and paid. All right, coming back the other way. All right, so I want you to remember that sequence there when we get over to the hard right edge. All right, so coming off of this low, well, now we're looking at this course with the benefit of all of this hindsight, but can we organize what just happened here to help us better understand what's likely to happen next? That's the whole point of it. A lot of times people can say, well, okay, what's the point of going through all that? What matters is it's over here. Well, everything is always relative. It's always related to what's happened in the past. Okay, well, here, coming in, so you can see it here. So it's pretty hard to miss this. So there's a 1 big 2 here. Here's the deep retracement for the 4, and we go up for the 5. So there's the Elliott count that is just sitting there. 1, 2, 3, 4, 5. We've gone from 2009 to 2018. Okay, so we have a 9-year trend that appears to have made a significant top here. Well, we got to check it. Let's measure it. See, is it technical? Well, right, just like any 5-wave structure, we're going to look for a relationship between the swing low of the 2 and an uptrend hit here. For the wave 4, where are we looking for the wave 4, right? 23 and 38. It's 38 to the tick. Right? And then we go up. Here's first target. It gets through second. It almost makes third target, right? So then we might look at that in an Elliott context and say, all right, well, that kind of looks interesting here. So 3 to the 4. Let's take our alternate price tool. Take the length of the 1 projected from the 4 low. We get almost to the 3.6 with 3.41, 3.618. So this had a big kick on it, likely earnings driven. Had a big kick on it as it went up to complete this 5. So within that, right? So let's go to a daily. Get off the longer term. Look at this on the daily. So you got to kind of break this down here. This is a little tricky here as to where the count is here. We have an extension in the 5th. So note here, we get an extension in the 5th of this degree and then an extension in the 5th of the 5th of the 5th. All right, so we look here and you go, all right, well, is it technical? All right, so here we don't get a diagonal, but given the length of that, so if I look here and that kind of looks to me like it might be technical. So what do we get here, guys? So it's 50 to the tick. And in fact, if you missed it the first time, you got a second shot at it. Double bottoms on the pivot, or pardon me, on the 50. So here's first target all the way to third. All right, so looks like we've got 1, 2, 3, 4, and given this, it looks like we've got quite an extension here in the 5th. So then I would look here and like, okay, well, so here now we get an overlap. So note this. So this is a diagonal. Right, so here's the overlap, right? That's when we can only allow for that in an ending in a fifth wave. So we get an ending diagonal here in the fifth of this degree in 4. So in a diagonal, right, as I've shown you this many times, we're looking for the relationship between the start of the 1. Now this in an uptrend, the start of the 1, the pivot of the 4. All right, so grab this. Here's the start of the 1. All right, up we go to the 3. All right, so we're in between. Don't quite make the 50, but we're looking for a 4, so we get just enough through. I'd be kind of curious as to how this looked here. All right, we got awfully deep on that, but here's the pivot we're looking for. This was a perfect 50. Up we go. I think this was technical as well. So a little shallow here on this 2, but we've got an A, B, C into the 2. Note here, we get the second target. So here's our 3 to our 4, and then we go all the way up and get second target here. So all good here. Now, this is what I wanted to show you. So again, I'm still on a daily, right? So equities, of course, we always defer to the daily. Let's push this down. Hang on a sec. All right, so let's look here now, coming down here. So we get a little ABC that looks like that's potentially now set up for an A wave. Well, first pivot, let's check that, right? So swing high, swing low. So you think, okay, well, this stuff is great on crypto. It's good in Forex. It's okay in futures, right? So what about equities? Well, here we go, right? So swing high, swing low. Here's the 50, target to the tick, reaction. And you think, okay, well, all right, so it worked once. How about the next time? Here we go down here. Right, swing high, swing low. Remember, algos love this. They love this pattern where we get a 3 wave, and then that's the one you take. All right, so here's the 50. So we've had 2. So first we had this one, then we have the second one to the tick. Right, so let's look again. Looks like we get a third one here. So that one's to the tick. So we've had 1, 2. Let's look again. All right, so here's a proposed B. We get a swing down. All right, so what do? Right to the golden zone. So golden zone to the well, looks like it's a very slight front run on that. So we had 1, 2, 3 in a row on the short side after putting in this pivot up here. 3 in a row, much like we did way back when I was looking. Well, I can't even get over there. But as you'll recall, when we started the video, we went through that sequence here. It's very equities, just as technical. Again, I don't know how many times I've said this, guys, and all I'm doing here is just proving the case, right? I'm not trying to convince you. I'm just giving you the evidence, and I'll let you draw your own conclusions. Okay, so all right, so what do we get? We got 1, 2, 3 trades in a row. Let's keep going. Well, we got a pivot here to swing low. All right, what do we got here? So this one's a little skinny. We don't quite make the 50 here, so you probably got left hanging there. But interesting here, that would have been very close here. So you've been using this little pivot would have been significant to the market here. Doesn't quite get there, but down we go. They get target. So is it a front run? Probably. Right? No way to know, but look at the reaction we're getting. So where are we in the larger count? Well, this kind of looks like we've got A, B is in. We know B was a perfect 50, so that's technical. So now it looks like we can get at least a start on a C wave here. Looks like maybe we've got something like this going in. Let's get this down a bit. All right, so we'd have 1, 2, that little gap here is slightly problematic. Always the issue with equities where you have gaps that you have to consider. So I would look here and say, okay, well, if that's my third here, I'm looking for some sort of a reaction here for a fourth, but well, it's shallow between the 23 and the 38. That's prime zone for our 4. And what do? All right, so now you look at that in an Elliott context, and we're right to target, gets a wick through it. And now we've had a little reaction coming off of that. So there you go. All right, no question. All right, so just again, I don't cherry pick these. The members decide. It doesn't matter, guys. Doesn't matter if I'm looking at crypto, futures, forex. They all trade the same way. This algorithm is in all of these markets. All right, so if you're interested in equity trading, you apply this methodology the exact same way. And we can look here. This looks like a pretty well-established channel coming down here. So you look here, all right, well, where we're going. So far, we're just going lower, and we're staying nicely contained in this channel. Nice Elliott channel coming down. All right, so all right, where are we in the larger degree? So let's back up here, and let's just think about that. Okay, well, remember, if we've got a completed 5-wave structure off of the low, which hopefully my data is going to fill in here in a second. Come on, TradingView. Do I need to refresh you? Yeah, there we go. All right, so here we go. All right, so we've got from this low, the 2009 low, right? Our 9-year trend, right? We complete a 5-wave structure, right? 1 through 5 is completed. So all we're looking for is the next 50. Wouldn't matter if this was a 1-minute chart or a 1-month chart. It's the same thing. All right, so here, look down here. All right, so could we be done here? Well, what have we done so far? All we've done is do the 38. Well, I mean, interesting, right? So it's technical. So we have a technical at the 38. We're getting a decent reaction. We do have a completed ABC, but that's lower probability. We're looking for the 2-wave between the 50 and the 618. Gives us this big range down here. Well, you say, well, wait a minute, though. It looks like that's completed. Well, if that's completed, it sets up the possibility that we have a WXY, right? Just connecting to ABC. So if this is done, if that's a candidate for a W wave, we'd be looking for an X and then potentially a Y coming down. So where's the next trade? Next trade would be on the short side. So that's complete as a potential W. Right? Now, there's the possibility, right? There's always the possibility that we're just going to have a very shallow 2-wave. It's not that it's never happened and that it never happens. It does happen, but it's lower probability. So I wouldn't be a buyer there just yet, because what I'd be anticipating is some sort of move like this. So we get this nice confluence here. So we have potentially, now if we're going to move up and we're going to go into this zone, we know, again, we don't have to wonder. We know that there's going to be an algorithm that will kick in here to sell in that zone. So at this point, see, and we know how technical it's been on the way down of that first ABC. So again, there's not enough here to be a buyer off of that on the assumption that we've corrected this 9-year bull impulse. And that now this first little ABC is going to be enough to correct it. Is it possible? Yeah, it's possible. But possible is not what you want to trade. You want to trade the probable. The probable is that we still got more complexity, more time to get through in this correction. So what does that set up if we get there? So of course we're looking for that to be correcting this structure here. So if it's a W wave, we'd be looking for it between the 50 and the 618. We'd want to see it take a corrective structure, right? And then we'd be looking for something like this to come down. Well, if that's an X, you could actually get it in ABC. So you could anticipate something like that. But within that ABC, we'd want it, ideally you'd look for a zigzag. So we'd look for a 535. That's what we'd ideally look for. Market doesn't always cooperate. But here's the next opportunity that I see is on the sell side, looking for it between the 50 and the 618. Now we got a lot of legs to get up there. So we got to get from 32 to a minimum of 38.8. A little work to be done, so I wouldn't be a buyer there yet. It's just not enough, right? This is too short in time. So if you get a 3-wave structure, I would very much look at. I'd probably do it with options. I'd be looking for it to construct a short position here, right? Rather than tie up capital in the short of the underlying, I'd do it with an option. So I'd be looking to structure a delta short position here with an option strategy, which beyond the scope of this video, you could just short the stock there depending on whether or not you want to tie up capital there. But that's just another option for you. But if nothing else, what I'm trying to demonstrate here is that, again, it doesn't matter. I know most people watching here are interested in crypto. It's the same thing, guys. They all trade the same way because it's fear and greed. It's fear and greed. That's all. All we're trying to do with the Elliott Wave is organize the fear and the greed, right? So what's most probable? What's likely next? That's all you get is probabilities. So the probability here is that we're going to move off of this pivot and we're going to correct it. So we're going to correct this swing. So to simplify, dominant swing high to swing low. We're looking for an internal retracement to move to an external retracement, right? So internal, staying within this swing. So we internal, then we push to an external that gets us to our target. Gets us to our algo target down here. So this target zone actually kind of puts us into a more narrow box here. So we get a little hot box that we can kind of shrink up a little bit. Now, so that's how I would leave my chart. Now, if we get up to, so I'd want to be notified. If we get back to the 38 here, I'd want an alert to go off to let me know that we've moved that far, because I don't want to have to watch this every day. If we get there, oh, great. If it keeps going lower, I'd want to be alerted if I were to come down towards this target without getting that. So again, I don't have to check, 100 stocks every day. But I think we know for a fact it's very technical, right? I just went through on the daily chart. I'm still on a daily, right? We haven't even gone to the intraday. And you don't need to with equities. You don't need to, right? So you can stay here. Just let this thing move back up, get into that zone, that probability zone, and then I would take the turn. If it breaks the 65, you get out of the trade, right? Loser. Right? It's not going to wreck your account, though. From 38 to, what are we there, to 41 and 50. It's, right? Again, it's always a function of size, but there's no reason to go hard and heavy there. But is there a trade there? Absolutely. Right, so keep that in mind, guys. You don't have to babysit these. That's the other advantage of working off of daily charts. Just be notified as it moves towards. If it's following your roadmap, you want to be notified. If it's breaking down what you considered the key pivots in your roadmap, then you want to be alerted there. Maybe you have to reconsider the count. All right, so hopefully that's helpful. You get some ideas there. You see here both with Forex and equities and really anything. You really want to always get some sense of where you are in the larger degree. Have we completed anything? If not, where's the next likely support or resistance zone based on this combination that we use? Of course, if we get this, right, it's going to set this up. If we get this, now I've got a modifier on there. So if I go back to original, if we get something like that, well, maybe you'd have to work with a modifier. Of course, we don't know when it gets there, depending on how long it takes to get there. It might get there and could be a year away. We don't know. So I would just leave this here. Right, when I get a pivot, if it's going to do it at the 50, that could be interesting. I mean, that would put us there. That's July of 19, right? So you got to keep in mind that we're looking at a daily chart here, right? So these are longer term trends. If we were going to look up into that 50, if we got there, that would be first quarter and end of first quarter. So we still have, do we have earnings? Yeah, we still have earnings coming. So we've got October 30th. So we're 2 weeks from earnings. I'd anticipate this would be pushing up higher towards earnings. And then if we got into that zone, it sets it up for a nice short right there. Potentially you get something like this. Might bring this down here. Just using that leading indicator component of median lines, and then we get a time component. We don't know where this shit, it could go down here. We don't know, but that's the roadmap that I would tee up there. All right, guys, so that's pretty much all I've got today. So again, as I will remind you, give us a follow over on Twitter. We do a lot of polling of Twitter followers as well for analysis. We'll poll on a pretty regular basis there. And if you're interested in this methodology and how to master it, how to apply it to any asset, right? It doesn't matter. Whatever you're into trading or wherever the opportunity is, you can use this any asset class, any time frame. All right. Want to learn how to do it? You can always give us a visit over at TradeDevils.com. Send us an email if you're curious. If you have questions, we're happy to do it. I just did a recent update on the behind the scenes look, so you can see what you'll find when you hit the Discord and the integration of Discord and Vimeo that we do for the training. All right, guys. When in doubt, just shoot us an email, ask some questions. We will get back to you. All right, guys. That's it for today.